It's Monday, August 28th at 4 p.m. and this is the Ogdenburg Bridge and Port Authority Finance Committee meeting. We'll start with business items, which includes the July 2023 financials. So Patty, you update us on that.
Sure. If we start with the balance sheet, the statement of financial position, our accounts receivable regular are approximately $765,000. 95% of that, of the open AR, is either current or 1 to 30 days, so we're doing quite well. We had one vendor who was out over 90 and paid over half of what they owed all in one fell swoop, and we're going to get the rest of what they owe tomorrow. So that number should be very strong. Our accounts receivable AEAS, that's 2 months worth of invoicing, and that will those will both be entered tomorrow for reimbursement. So that will go down to 1 for next month. We have our fixed assets do not change that drastically. We did put into machinery and equipment the new telescoping stacker conveyor that we just received from US Materials. If we go down to our current liabilities, you'll notice our regular accounts payable is at 603. Our AEAS contour is at 910, and that will disappear when we get paid also. And we have project accounts payable of 462. 340 of that has been paid. 33 of that will be paid next week, and 88 will be paid shortly thereafter. So most of the project payables will disappear, and as soon as we can prove payment, then we can get the reimbursement from whatever authority we're receiving the reimbursement. On those top 5 vendors under our accounts payable, the first one has been paid $40,000. The second one has been paid $41,000. The third one has been paid $42,000, and the last 2 have been paid in full. And thanks to the salt ships coming a little earlier than we had anticipated, we have the extra cash to get these paid down. Are there any questions on the statement of financial position?
Sam, you good?
I'm good.
I will make a note that one thing has been pulled out of the balance sheet. There is a new reporting requirement from GASB, the Government Board of Reporting, and it's called GASB 87. They've changed the way we report our leases so that we're doing a present value of all the monies that we could possibly receive from all of our leases that are out there. Then they're creating an interest that we would receive on this income would we have it. Then there's a percentage for what we might not get if a tenant pulls out. But this comes into a realm of what ifs. So while it's in our financials, our official financials with the auditors, because it skews the numbers $15 million this way or $5 million that way, we've just deleted them from the internal financials so that we don't have to explain every month that, don't forget, this is the GASB 87 principle that we have to follow.
I mean, I suppose if you had income, unlike us, that you could put away somewhere, there'd be a need for it.
It would make.
But ours comes in and it goes out the same day.
Yeah, but it is something that the government is requiring, so it is officially on our, it's in our audited statements, it's in our official documents. So other than that, we'll go to our budget to actual. We're happily up a bit on our bridge revenue. So we're over on that. Our airport revenue is up a bit. And as much of what is considered airport revenue is based on the number of turns the plane makes, the more times that they actually come in and leave and make the turn, we get a little bit more money. The fuel sales just haven't come in as we budgeted because we had done so well last year. We upped the anticipation for this year, just hasn't been met, but we're still making a profit on the sales over expense to purchase the fuel. The AEAS income is up because they added the 2 flights. Our industrial park revenue is almost even. Our marine terminal revenue, part of the reason that is up so much is the wharfage for the salt that has come in early. So instead of spreading it out over the year, it's come in all in July and August, and there'll be more in August, so we'll see that. And then we had the salt crunching that added a lot in the earlier part of the year, so our overall year-to-date is fairly high. Our bridge expenses are almost all right on target. Anything that's hasn't been spent, a lot of it is money that we're trying to defer and try to keep our costs down. The airport expense, the only thing I can see in the maintenance that could be a little high is it appears that there was some extra diesel purchased, and that's not for the airplanes, it's for the trucks, our vehicles. Then the general expenses are up. Part of that has to do with a bond interest increase that came into effect in June or July. And our LEOs are up a little bit from budget with the statement that we had last year that the invoices should be back down. And then we had some officers out and they crept back up. We hadn't anticipated to creep back up. So it's not much, but it's a little bit. Under the industrial park, the only thing that is over budget there, under general expenses, and while the economic development director is still reaching out to the one tenant who left last year, we wrote off what they still owe us, which came to approximately $7,000. There was a hiccup in getting the additional, they stayed 1 month longer. They thought they had enough security deposit to cover it. When they left, they didn't. And then we were trying to get the funds back from them. But for an accounting purpose, we decided that we should just write it off at this point. And maintenance expense under the marine terminal, we had to rent a dozer, I believe, for the salt pile, was it?
Yes.
Yep. And we had to get some new tarps. And we had the scale repair due to the lightning strike. So that's the overage under maintenance expense. And as I said, most of the underages, which are wonderful, are just basically deferrals. Any questions?
So we'll continue to try to pursue that client for the.
Yes.
Sam?
Oh, good.
Then you can see on the cash flow, we brought forward from July a modest balance of 67,000. We have the increase you'll notice under port operating and rental fees. We're anticipating that the billings will bring in the cash in August and September for the salt chips that we've had and the transformers that we received. And at the bottom, you'll notice under the grant portion and capital expense, we've spent the money in August for the telescoping stacker, and in September, you'll see the additional other income that is the reimbursement amount for that stacker, and the same with September, and then October and November, we should see most of the rest of the money that will come in from that. And the airport patrol vehicle, which has now got a delivery date of September 9th. And that is covered under a grant, so we will see that money come back.
I'm sorry, does that have to do with those two additional pieces of equipment that we have to buy on our own?
The fourth piece, the one you'll see under September, is the piece that we have to buy on our own. And part of October is the balance of the third piece, which may or may not be reimbursed depending on how we're paid out for the payment that we're submitting. But the other October items, the other October item is the dump truck, which we expect to see in October.
Isn't July the month we have to pay the large amount for the loans at the airport?
Yes, we paid 105, 110
110?
in July.
Is it from here on out the increase or decrease?
Increase. The principal increases, the interest decreases. The amount we have to put away every month will remain the same. It's just one.
Okay.
We're going to gain $10,000 every July for the next 4 or 5 years. Then I believe it goes up 15.
Good.
Any other questions?
Oh, yeah. Great. Okay. Anything else out of the, anybody else? Other such matters? No, anything of that?
No, Mr. Chairman.
Nothing?
No.
We all set? Then
I'm all set.
I would entertain a motion to adjourn.
I make the motion to adjourn.
All right. And all those in favor say aye.
Aye.
Aye. We are adjourned at 4:13.
4:13.